Sure can. Hey everyone, this is the Precision Markets office hours weekly call that we have on Tuesdays at 12 o'clock UTC -7. This is your Precision Markets coach, Brian. And if this is your first time here, call's simple, really simple. You just ask your questions and I will answer any kind of questions that you may have during the duration of this time. And then we'll have the recording up on our Teachables website. So with that, I'm gonna go ahead and let us begin. And Perry, the floor is all yours, brother. And you can also share your screen as well too.
Okay. Let me see something. Oh. Okay. Can you see it? Can you see my screen?
I can see your screen now.
Okay. So basically, I just want to, it was a great session last time. So basically, let me delete everything. For me to take a trade, right? Okay. So basically, my daily time frame is my market structure. Correct?
Mm-hmm.
Exactly. So higher high, higher low. And just I'm going to simple trading day. Okay, this will be my last. So this is a pivot base demand zone. I'm gonna let you just let me know where I mess up at. This is a pivot based if I do mess up. A pivot based demand zone on the daily. So I go to my 1 hour. Let me go to today. Okay. So I go to my 1 hour, and what do you know? Yesterday we were in my demand zone, and I see a 1 hour chalk. So this is today's price. Okay, so I see a 1 hour chalk in my demand zone, which is that's giving me calls to buy, and that is the reason why I'm looking at this green candle, because we had a 1 hour chalk in my demand zone. Okay, that happened. Okay, so today, price is right here, and this is also okay. So I know it chopped in my 1 hour demand zone. So I want to. Okay, well, this is also
put the two charts side by side, bro. That'll make it easier for you.
Okay, well, I wanted to do because I can mark this as a 1 hour zone too, right? Right here.
Yeah, you could.
Yeah. So
put the daily and the 1 hour side by side. That'll make your life a little easier than having to switch between two charts. And then it'll make it easier to kind of look at. Click here again. Oh, is it? Oh, it is.
So this is the 1 hour. So
what's on the left? Oh, yeah.
The daily.
Yeah, change the left. Yeah, cool. So yeah, now.
Easier. Oh, first of all, I think I gotta. So this is a 1 hour zone right here too, right? Okay, okay. So I know I'm in my daily zone right now, so it's too much screen on my screen. So I want to draw a 1 hour, So I know I'm in my daily zone and not chopped, and now I'm drawing a 1 hour demand zone. So 1 hour demand zone, and what happens to 1 hour POI? Okay, so now I'm gonna go to the 15-minute to see if I have a POI.
You don't need to. You got a 1 hour POI.
Okay, I don't need to. All right, so bam. So if I have a 1 hour POI, but what if it's like, so if I have a 1 hour POI, I don't need to find a 15-minute POI?
No, you don't.
Okay.
People start doing that because I'm doing that, but like you do not need to do that. There's a reason for why I do that. But for most people, it's only going to confuse you and put you in the wrong place. You only need to use 3 time frames. You don't need to use 4.
Okay. Well, I have a 1 hour POI.
Structurally, look at where you're at.
I'm in a demand zone.
No, I said structurally, not supply and demand. Structurally, look at where you're at. You made a high.
Daily?
No, go back to everything's about structure. Everything we do is about structure. You have to understand structurally what kind of demand zone that you have. So see, it's a misunderstanding people have about supply and demand. So there's only 4 types of there's 4 types of supply and demand zones, and there's only 2 types of demands, 2 types of supplies. So you have this demand touching right here, where it breaks into, right?
Mm-hmm.
You don't need a 15-minute demand zone. It already tapped into your 1 hour.
Mm-hmm.
So go down to your 5-minute, which would be whatever your entry time frame. And now, structurally, what happened on the 5-minute? Now, why did you pull that point specifically?
Because I like to see, like, I would like to, this is all like, okay, obviously I wake up, this is 4:05. So I like to take trades above all this nonsense right here.
Okay.
So, so I will look at it like this. Lower low, lower high, and then this lower low. And I would like to take a trade above all this. I wanted to like break and retest. It already broke and retest, but came back in.
Mm-hmm.
And time is it? 4:10. I'm not even up in. Okay, so I'm up right now. I'm doing this right now at 4:15. Building pass. So something like coming down a little bit, I would take this, coming to retest this line. And that's
you're not paying attention to structure though.
And what structure should I be paying attention to?
It's the same thing on every time frame, bro. It's fractal. So you have here a lower high, a lower low, a lower high, and a lower low. It doesn't break until this point. So this is where you only after this break do you even have a trade opportunity. And from that, you still got to figure out whatever supply and demand zone you're going to use for taking the trades off of.
So this is something you wouldn't even take?
No. Not until it breaks here. No.
There's no demand zone here though, obviously, right?
There is a demand zone though. Yes. There are a bunch of demand zones right there.
So, but you take trades off 15-minute demand zone, don't you?
It doesn't matter. I take trades off of a POI, bro. The time frame does not matter. You have a 1 hour POI tapped into, you can take the trade. If it's a 15-minute, you can take the trade. If it's a 1 hour, like the time frame, like is so irrelevant.
So since it tapped into my 1 hour POI and it's trending up, I can start taking trades.
No, you can't do that. You can do that if you want to. You're not going to find a lot of success, but like that. Everything you do is based on structure. You have to understand multi-time frame structure. So what that means is that on the higher time frame, you see this. This spot on the lower time frame. 1 second. I drew that really badly. This spot right here, this circle right here, looks like this. Well, let me change the color so it's easier to remember. Okay, blue. This spot right here structurally looks like this. You find a demand, it breaks the structure. You find a demand, you take a continuation trade. Which you didn't have a break until right here. So.
And then where would I take my continuation trade right here?
You don't have one, not in this setup.
Not in this setup. Okay, because I usually like this will be my highest point, and then nothing has passed here until this one right here, past this one. Because nobody has passed, no candle body has passed here until here.
But you're not even looking at market structure. This is the reason why I've told you multiple times, turn off that fractals, that fractals indicator, because it's got you all jacked up about direction. Your structure points are where you have these blue spots. All these blue lines, these are the blue market structure points. Those are your market structure points. So until you pass this high, you have nothing.
And then there's still no trade for you that you would take this day, right?
Not the, let's see. No, it didn't come back. Didn't come back close enough. So, no. Go down to 3 minutes. You had a trade right here on the 3 minute.
And the reason I had a trade on a 3 minute because it tapped into my 1 hour POI and it chopped right here, right? And then this is the change of character. And then it came down here to like great pricing.
That's not your low. This is why I said turn off the fractals. Your low is over here. Yep.
Came down here to great pricing and bam.
Now, we went from the 5 minute to the 3 minute time frame. What changed?
Change of character and breakup structure.
What changed about market structure?
Change of character and breakup structure sooner.
Okay. What did it do on the 5 minute?
Excuse me, what did it do on 5 minute, you said?
Yeah, what did it do on 5 minute?
It did a change of character. It did a break of structure until up here.
No, it was change of character right there.
Yeah, it did a change of character.
And it just never came back.
Exactly.
Now, let me reiterate the reason why I say timeframes are relevant. What about market structure conceptually was different between both the 3 minute and the 5 minute? Did any of the rules change for market structure?
Did any of the rules change for market structure? Lower low, lower high, lower low. No rules changes. It just happened faster on the 3 minute.
Exactly my point. That's why I say time frames are irrelevant. Like, don't get caught up. Oh, it's a 15-minute POI. I could trade off a 1 hour POI. I could try to trade off of a 20-minute POI. The time frame you pick is just a reference of time. 3 minutes. This has more structure than the same spot on 5 minutes.
Mm-hmm.
But conceptually, nothing about market structure was any different on the 3 minute than it was on the 5 minute time frame. But you have to understand the time frame comparisons and how they work, right?
Mm-hmm.
That's why I sometimes take trades off of 1 hour POIs. I sometimes take trades off of 15-minute POIs because all I'm following is market structure. That's it. It does not matter. I can take my entire system and start taking 15-minute POIs. Taking trades off of 15-minute entries. I could go tomorrow and take 1 hour entries. I can go tomorrow and take 3-minute entries. The time frame means absolutely nothing. It's just a reference of measurement of how big what one candle has. Either a candle has 3 minutes worth of information, it has 5 minutes, 15 minutes, 1 hour. The higher that you go, the more stable the trend is. The lower you go, the more noise that you get because it moves a lot more. But you have to be able to understand, okay, higher time frame comes here, it's tapping into this. This time frame is a microscopic view of what's happening from the higher time frame. And then the entry time frame is an even more microscopic view of what's happening from your middle time frame. That's the key to this trading system stuff that you got to get. That's why I keep stressing structure is important, then understand supply and demand, and then multi-time frame analysis. Because all you're doing is looking, right? So do this. Divide your chart into 3 charts real quick. You can do side by side. That's fine. Yeah, that one. Perfect. All right. Put daily here. And then I want you to put 1 hour here. And then I want you to put 3 minute over here.
Yeah, that 3 minute been hidden.
All right. Now, zoom in on your daily chart. I want to see this point. Cool. So right there is perfect. And then now on the 1 hour, go to the same spot. Oh, it's right here. Okay, perfect. Perfect. Right there.
You want me to fast forward or just no?
Nope. This is fine where it's at. And then find that same spot on the 3 minute. So find that on a 3 minute chart. Oh no, you could have kept that the entry though. That was fine.
I'm gonna rewind it or leave it.
Right there. Okay. It's perfect. All right. This one candle right here goes up. You had tapped into a demand for the higher time on the higher time frame.
Mm-hmm.
These 2 candles right here, the red and green candle,
Mm-hmm.
was this movement. That was that movement on the 1 hour time frame.
Yes.
Make sense?
That makes perfect
So
sense.
the daily, the 1 hour should be a microscopic view of what is happening on the daily.
That's 2 days of price action.
But what you end up seeing was you see 24 candles on H1.
Mm-hmm.
Now we're going to talk about today, right?
Yes.
Today we have this one candle, which clearly shows price is probably going to move upward. We know that also because order flow wise, nothing has changed on the 1 hour time frame. It comes in and it taps into the POI that you picked, right?
Mm-hmm.
This right here is a microscopic view on M3 of just as those wicks right here. So you're getting 20 candles worth of information on M3, which ultimately you see the same thing happen that I just showed you on H1, right?
Mm-hmm.
You see, you go from zoom out just a little bit on M3.
On where? On what time frame?
M3. This one. Yeah. Zoom out just a little bit. Okay, perfect. Yeah. So I don't know why I did that. Okay. I gotta eyeball this. Hold on 1 second. You get a lower low here, lower low here, lower high here, lower low. It breaks right here. And then you get a second break. You end up taking your trade here, price goes up. So now look at your 1 hour time frame. On your 1 hour, I want you to just click on 1 hour. And then I want you to just press one candle, like right here. Just go for it, one candle. It should be a bullish candle.
Wow. I didn't know that just right there. Yeah.
You should have another bullish candle.
Mm-hmm.
Now, scroll over on M3. Structurally, you can zoom out a little bit. Sorry, man, this thing a little bit. You got higher high, higher low, higher high, higher low, higher high, higher high, higher low. There's going to be a higher high. Keep going on M3.
Oh, that's it. We done.
Oh, okay. It was done for the day. But yeah. Now, that was not voodoo that I just did. I'm really looking at the market structure on M3, and that's going to tell me what direction, what kind of candle we should get on H1, which also would explain the candle that we get on daily. They're just microscopic views.
So yeah, you put this one as a higher high. I think I moved it. So
yeah, I don't know what happened, but yeah, pretty much it kind of proved my point that I was trying to make. So.
Yeah. So as long as you don't care if it's this little tap, as long as this little tap inside my demand zone, that's enough for me to go in there and look for a buy.
If you start seeing the signs that you see structure changing when you go investigate, like all we do is
like if I start to see this on the right on my entry time frame.
Exactly.
Yeah, so if I tap in here, then first I'm seeing this and this red and this lower low and lower highs. Obviously, I don't want to buy. But I start seeing this change of character, break of structures, then I want to buy.
Mm-hmm.
Mm-hmm. And then exactly. So we keep breaking structures, going low. I'm not going to buy. But if it does break structures to the upside and change the character, then I would like to buy. All right.
Mm-hmm.
And that's how we know, even if it's a small tap on a 1 hour, see what it's doing on a microscopic time frame, if it's changing character.
That's why I don't believe in using time frames that are so close together, because you don't get the same. You can't do this. So that's why it doesn't matter if it's a H1, but H1 and M15 are so close together that sometimes they end up having the exact same market structure when you go look.
Yes.
Or other times, this actually on M15 was structurally going down. But you have to understand the difference between those two, which is a more advanced thing to be able to look at and say, okay, right now they're the same. So I can't do this. Or other times, oh, M15 is playing the H1 pullback. I can't actually use this. But it's a more advanced thing because it's not a day-to-day thing. This right here, daily 1 hour M3, M5, that's going to always stay like this. There's never a chance where M3 is going to have the exact same structural movement as H1 because that time frame is too far apart. That's also the reason why I don't look at daily and 4 hour. Daily and 4 hour are pretty damn close. So I only need one. I only need one of the two.
Would you trade like this? Like just like obviously one pair, you trade like this? Like three screens on for one pair?
Yeah.
Yeah, that's pretty cool. You really dissect. Okay. How about
you always have to know where you're at. You have to know where everything is supposed to be going. So the thing is, you don't want to get too far away. You don't want to go too far, right? Like I don't do, for instance, a daily POI and an M1, entry, because that's just too small of a movement. I'm gonna get too many false signals.
Yeah, that's very understandable. That makes sense. So would you enter on the 1 minute on here or on the 3 minute? I know you're a 15-second guy. So, but
time frame does not matter, bro. I look at multiple time frames. Whenever I see the one that gives me the right movement, I'm going to take it. Some
So
days
with-
I take some days I take M1. Some days I take M2. Some days I take 30 seconds. Like it really does not matter. All I need to know is I need to see. There's a range of time frames that I will use. And if I see the right reaction at my POI, then it makes sense, right? But like for instance, for an M15 POI, you'll never see me take an M5 trade because the time frames are too damn close. Like there's no way for me to see the smaller reaction of the movement on M15 from an M5.
So this right here is let's zoom it up.
You had an M1 entry. No.
M1 entry in here, right?
Mhm.
Yeah. Yeah, you know, I have to get off that. Well, the M5 is just I've been my baby for a while, but I gotta really dissect the chart, obviously.
Yeah, I'm not a time frame trader. I don't have time frame, this magical time frame, because there's no such thing as a magical time frame where you make more money than another. It's all about the system. I can take my time frames and be a swing trader. I take my time frames to be an intraday trader. It doesn't make a difference for me.
Why don't you swing trade often? I mean, I know you can.
Oh, because I don't have the I don't have the temperament for it. I don't want to sit there and take one trade all week and take 3 days to find out the result. Like to me, that's maybe later on in life when I have kids in the family, but as of right now, no. I like knowing within the hour, did I hit take profit? That's the lifestyle I want. So it means I could come to the charts if I get a high volume, enough movement on the right day, which generally sometimes I can wait for London shifts and get that, or you can get that in an hour before New York or hour after New York, and then boom, you take a trade, and then the next hour it's done. Cool, I'm done for the day. I can go do whatever I want to go do. Right. Swing trade also works like that too, right? Like with swing traders, they'll wait like, oh my God, sorry, somebody was in the thing. I never noticed. Who is this?
Somebody.
I didn't know somebody was in the thing.
There a problem?
And I was just looking to see if they got into it. I didn't know if they got into the call or not. Hey, Jamala, are you there? Let us know in the chat. Yeah, no, like swing trades, right? Swing traders. Okay. Let me share my chart real quick. Perry. I'm gonna show you an example. Give me 1 second because I was working on something too before I got on this phone call.
I should have hopped on that. I should have hopped on that 3-minute time frame.
Time frames are really irrelevant though, bro.
Well, for the change of character.
Time frames are relevant. You have to. It's all about the system. System's all that matters. Which one is this? That would be 4 hour, and then this will be 15 minutes. And I need them all to be.
I have a question in the chat so I don't forget.
Write down the chat real quick. All right. So let me see if I can make this work today. All right. Cool. So here we have the weekly chart, right? Price comes into a supply zone here. So this is a weekly supply. No, not monthly, weekly. All right, cool. On the 4 hour, it comes here and we get a break of structure, right? Oh, I can, perfect. And then it ends up giving us another break of structure here, right? So here we have a supply from a 4 hour. So essentially at this point, this little small tap right there is these two candles, right?
Those
On the
two
weekly.
candles.
The bullish and the bearish candle, right?
Yes.
On the 4 hour, that ended up being this push upwards, that break, this movement, and it goes all the way down to here. Just those two candles, right? So now we're going to investigate this tap right here. So this tap on the 4 hour ends up being this M15 movement. And what do we get? We get high, low, high. Come on, bro. Not doing what I wanted to do. Okay. We get this break right here. Oh, I know what I need to do.
That's just a break of structure, that one right there.
Yeah, it was a break of structure.
Break of structure. Right, that's a higher high, higher low, higher high, lower low.
Yeah, I do this. Just to make this easy for you. Where is my make it do what it do. Yeah, it's a horrible day. Okay, so we end up getting high, break, higher high, break. This is a lower low right here. So price comes back into your supply zone. So now this is a supply for M15. And you take this trade, right? That ends up turning into that, right? So I need to do one more thing to make it make sense.
It's obviously swing trade.
Definitely a swing trade.
Yeah.
Definitely don't know why it's not showing up how I wanted to. Okay. Oh, I just have to go farther. There we go. Start seeing it on the weekly. So this is literally all the exact same trade. Now
on the daily too, yeah.
Here's the weekly right here.
I mean the weekly, yeah.
Here's the 4 hour, and then here was the 15-minute. See how microscopic those views are? That's why you have, but the system is, I don't care about the time frame. The time frame does not matter. It's just the time frame needs to be relevant. Now, I'm not over here taking this on the 1 hour, because on the 1 hour structurally, it's the exact same spot as the 4 hour. So lower high here ended up being a higher high. This ends up breaking to make a lower low. You can see my cursor. It's the same spot. It pulls back. Yeah, you could take this trade off of this and say, okay, this was the supply zone that you used, but it's pretty much the exact same. There's not very much variation. So that's going to cause me to use a bigger stop, which means I'm going to reduce my reward.
Yeah, that's what I do on the 5 minute too. I use bigger stops. Yeah.
You can reduce your stop by going to a smaller version of the same movement. That's what you're looking for. Smaller version, the same movement that gives you confirmation to take this trade. Like you can't even see this type. Well, I don't even have it turned on. But okay, now you can. You still can't even see this circle that I made on the 4 hour on the weekly. That's how small of a movement it is. It's literally in the middle, somewhere in the middle of this bearish candle that it did that. Now, let's talk about timing, right? Price this was August 15th at 8 a.m. my time. It comes over here at 4 p.m. That's 8 hours in a day. You set an alert. It comes in and gives you an alert, right? So then let's talk about setup. So it comes into here. This was at 9 o'clock at night. By the time I got my setup, that was nearly 5 hours later. Then you take the trade, right? Well, if your target was 1 to 10, which this trade ended up going 1 to 50, we're going to put it just 1 to 10, right? 1 to 10. You take this trade here. This was on Tuesday, my time at midnight. It almost breaks you, but 30 minutes later, it took you literally 2 days from Tuesday to Thursday to figure out if you had a winning trade. Now, if I had more capital to work with, probably I'd be more interested, but I'm raising right now. So do I really want to sit there and take one trade across 2 days to find out if I get it right or wrong? Personally, not at this point in my life, but later on in life, maybe. But there's going to the smaller time frames, smaller time frames that you go to, the smaller time frame you go to, it's just a measurement of time.
Yeah. So also, how do you know that it's value in the market at the moment? Like, just say if I'm coming in to take a trade, because sometimes like the market, it's like are weird sometimes. So how do you know like it's value in the market? Like, oh, like this trade, when I take it, I know it's going to be value in the market today. How do you know that?
You just have to read. You have to read the candlesticks.
So candlesticks tell you about value?
Yeah.
Can you show me?
So who you think made all these 4 consecutive candles going downward?
Sellers?
No. More specifically.
Banks?
Who? Exactly. Why do you think price is moving sideways here?
No bank push, no movement, no value, no institutional push.
The Forex market exchanges $7.6 trillion in a day. Retail traders only make 4% of that. So if they only make 4% and they made this and price is moving sideways, what's the difference between this and this?
Sideways movement.
So if $7.6 trillion is exchanged every day, and you ain't got $1 trillion and I ain't got $1 trillion, that means that banks are the ones that cause the movement in the market, right? Because neither one of us have $1 trillion, and $1 trillion ain't really something you just pick up on the side of the street. So if the market's moving sideways, that's obvious a sign that, oh, the banks have not decided what they want to do, or they're trapping people. So therefore, should you be trading or not?
Okay. So like my GU trade today, does that mean that it was value in the market today?
Not necessarily, no. You also have to understand how their bonus structure works. Whenever a bank hires a trader gets a book of business second week, somewhere first, second, third week of January. He's hustling all year to make a return on that book of business, right? But when it gets to December time, what is something that you probably do in your business with employees?
December time, like just not go as hard.
That's definitely one thing. But more importantly, what do you do at the end of a business year with employees?
Go over the year.
Exactly. So bankers, their fiscal year ends in December, which means what's every employee's favorite thing to get at the end of a fiscal year?
Bonus.
So if you're a trader and you've been struggling all year at this large bank managing 100 billion, 150 billion dollars, and you're up 11% at the end of the year, and your goal was to hit your target was 10%, are you going to be trading in December?
No.
That's why the market every December does the exact same thing. Now, to us, it really looks like it moves, right? But I'm gonna take a look. We're gonna take a look at this, right? So, what direction are we really moving here? And I want you to compare it to this right here. I'm gonna put them side by side. What do you notice about them?
Yeah, top left is a real real lower low, real drag down, drag up, and yeah, it's like really going down to the left, and to the right is pretty much sideways consolidation. Price on top of each other.
You could decide to trade this if you want. When I started seeing this, so I said a week ago, I'm done. I'm not going to waste my money because I might get one trade to go, but how many losses do I have to incur to get that one trade that I win? Now, we don't know this. Like I know arbitrarily it's somewhere after Thanksgiving, a little bit before Christmas, but every year is different. It depends on the financial conditions of the year. And I don't know if you probably haven't read the news about bankers, but they're getting a 30% cut in their bonus this year. So they really have no incentive for them to be trading right now. And there are layoffs happening at Wall Street. It's all over like business news. So if I know that, why am I trading? Because the only reason we get our trades is because of banks. They have to decide where they think they want to buy or sell. Now, if you go to the elite side, elite's going to talk about algo trading, in which banks, 76% of all trades now are being done by computers. But at the same time, they're still being done by people who watch the computer. So it's not the computer's just running by itself. We're not in some Elon Musk AI brain-driven world. We're still in a place where people have to turn the AI on and off and decide if the AI even approve the trades that the AI even takes. That's just not how banks roll. So regardless, you can see the price action is different. So whether you believe in AIs or human people, you visibly can see that there's a difference between the left compared to the right.
You know, what is the significance of a V-shaped recovery? I've seen that. Like, do you even apply that to your trading, a V-shaped recovery?
It's important to know where there's momentum. So right now, you have some movement right now in GU, right?
Yes.
But it's not the same as comparison when you looked at April. April was pushing, right? Then you get to August. August was more moving sideways. Then we had a pretty bullish September because of everything that happened and the crash of the UK economy. But it's also not the same as comparison to like this. There's a difference between a trend. There's the difference between a non-trend, right? So what you look for, what a V shape means is a strong reversal like this.
Some people say look for that. What is what about, do you use that in your trading?
All the time. It's a requirement of mine.
Okay, so what is a V-shaped recovery? I see it, but what's the significance of how you use it? Like
look at how price pushed down and then it rejected and pushed back up.
So you'll be buying that.
Now, you got to think in terms of banks. How many bearish candles in a row did you have?
1, 2, 3, 4, 5.
And then you just magically have a bullish candle at the end of that. So you mean to tell me that all the bears just stopped right at this point and the bulls were able to come in and give you a bullish candle after all of that consistent momentum?
So could you show me this on the entry time frame where you will be?
Doesn't matter. All these concepts apply to every time frame, bro. So if I show you on the entry, it doesn't make a difference than showing you on the daily. It's the exact same thing, right? Yes. Price pushes down and you all of a sudden have a bullish candle after a string of 5 bearish candles. That only means one thing. Who could do that?
Banks.
And what does that mean about price?
It's ready to go, take off.
What did price do from there?
The golf 2 days straight.
That's all. That's why you look for a V-shaped recovery. What did price do here?
Mm-hmm.
How many consecutive bearish candles did you have in a row?
Mm-hmm.
What happened right here?
Yeah, wick.
So after all that bearish momentum, it stops. So without me knowing anything, and if I just see this at the right spot, that's the key. If I see this after all this momentum, and then you get this, I'm going to buy.
Mm-hmm.
And my target would be whatever, the target is. And more than likely, that means that's where momentum comes in and I get rewarded. Does that make sense?
Yeah.
So, yeah, that's why that's important. Like, please remember, none of this is your market. None of this is my market. It's the bank's market. Your goal is to ride with the banks. Like at the end of every day, your goal is to ride with the banks. So you have to be able to see when they're getting into the market and when they're not.
Mm-hmm.
And when that happens, then you can be able to figure out, okay, I know to enter in now, because every time you're taking a loss, most times you're taking a loss, it's because you're trying to go against the momentum of the banks. Now, let me go back to my favorite pair.
Favorite pair. It's over with for that pair, man.
It's a new beginning. So, okay. Let's figure out which one's which. Oh no. I'm looking on the wrong side.
This pair is very lucrative for you.
Yeah, it's the most profitable. It's probably either the first or second most profitable pair that I trade.
Man, because I know since I joined the course, I know ever since it's been going on, you haven't traded this pair since I joined the course.
Oh, I'm not stupid. I'm gonna show you why. So this move right here, right? Strong move down. Do you know who caused that?
Yeah, that Bank of Japan did that.
And you know how much money they had to spend? $38 billion USD. Would you try to go and be buying and all of that? So I don't have enough money to fight the Bank of Japan, nor do I want to. But at the same time, you have to understand, like, these sharp movements are caused by banks. And that's, you literally can visually see this was another move. $26 billion was spent in a matter of a couple of hours. Well, it was spent like right here, basically. So this is 9 a.m., 10 a.m. In an hour's amount of time, that caused enough movement in a sell-off rally. But when you go against, well, that started the eventual downtrend that we have now for UJ. But that's why you don't go against the trend. Like, you want to ride moves like that. And so lately, I've been selling on. I was selling on UJ until I stopped for the end of the year, because I knew, all right, the banks had decided that's the direction they want to go. So I'm gonna go back to the daily and look at this again, and literally look at what point that made. It made the higher high, and then where did the price go from there?
Drop. Got it. Do you use that volume indicator at the top of your screen?
Kinda. It's always sitting there, but I don't really use it too much.
Because sometimes what I use is like, I go on, where is it? I go on something called where is it? FinViz, and I look at like their performance. Yeah, and I see, like, like that's how I used to trade. It was horrible, but now I only do 2 pairs now, so that's kind of like my value meter. But you probably wouldn't approve, but
well, I mean, you want to know if the orders that comes in, right? You don't want to be trying to take orders in a low volume situation. So I'll show you this. Look at the volume meter at the top. I'll post down, make it bigger so you can see. Okay, cool. And I want you to look at this point here and this point here and tell me what's the difference.
The right looks like it has a lot of volume. Yes.
Now, here's the scary part. Let's go back to some interesting stuff. Let's see how interesting I can get. Okay, here we go. I'm gonna draw two lines. All right. What's significant about the line on the left?
The difference between line on the left and line on the right?
Mm-hmm.
Line on the left. I don't see any difference.
Okay, I'm gonna tell you there are two things about it. Well, there's you probably won't know all the reasons why I'm gonna say these are significant, but I'm gonna hint to one. First one, look at the volume.
Yeah, the volume, that's obviously the volume on the left is lower than the volume on the right.
By how much?
A lot. Oh, by 2 million.
200,000 here compared to 2 million.
I never read that. I never knew about that to the right hand side. I've never seen that. That's crazy. What is that? 2 million what?
I don't know the exact measurement, but I mean, like, I think it's number of orders that comes in.
Oh wow, I've never. This is the indicator that they have on TradingView.
Yeah, it's the default volume indicator.
Default volume. Yeah, I've never seen that one. But like, so do you look at this? Okay, so if you're trading for the day, does this coincide with the entry time frame as well? Obviously, do you look at it on a daily perspective more than an entry time frame perspective or trading time frame?
I don't look at volume on the entry. I mostly look at it higher because I just want to see overall. Like, I know the general volume of what it should be during each session just because I've seen enough charts. And when I see the volume is low and the market's not moving, it makes sense. There's nobody in the market. If I see the volume high and I see the market not moving, that's clear indecision. If I see the volume moving and the market moving, that means that they've decided which way they want to go. But if I start seeing a lack of orders on average based upon what I know it should be around, then I'm more skeptical about if the move is true. But let me tell you why I highlight these 2 points. The point on the left is when we declared the shutdowns. That was March 2020, March 13th, 2020. The point on the right is when the Fed decided that they were going to start hiking interest rates. Look at how much of a different reaction that caused. So when people say fundamentals don't matter, this is clear evidence. Clear evidence. Now, I'll show you yet another chart.
Now it's going up. Oh, right now it's trash.
I don't know. Oh, these are old pictures. Okay. So
wow, it was a lot of volume in March on Nas.
This was the pandemic. And then you have somewhere in here, FOMC, FOMC, and FOMC somewhere over here. Now, you see the volume has been rising until it gets to this point. But look at the volume. Look at how the movement of NASDAQ was compared to all this volume.
Yeah, because you can even see it's like a bunch of higher highs, higher lows, like liquidity being stacked to the left, but to the right, they're all spaced out. Lower low, lower highs, like spaced out.
The market, the indices just move up. That's what they're supposed to do. It clearly found a peak. And then when you had all this FOMC, this has all been since the beginning of the year. And literally, it's been swinging high, lows. Like, it really does not know where it wants to go. So, difference of orders in the market compared to everything was pretty much business as usual up until here. That's why volume is important. All these things are really important. So,
okay.
But does that make sense?
That makes sense. That makes sense. I mean, yeah. And then to conclude this session, I need timeframes don't matter, but I need to go maybe if I'm in my POI zone, go into a smaller time frame to see if you get a break of structure.
What I mean by timeframes don't matter is you don't put your trust in the time frame. You put your trust in structure and the concepts.
Yeah, okay. That's very understandable. Yeah, the 5-minute structure did not show me a break of structure, so I'll have to wait longer. But when we went to the 3-minute time frame, it showed me a change of character and a break of structure, and I could have took it sooner and more profitable trade.
Exactly.
Period. The time frame don't matter, just about the structure that matters. What time frame give you the best structure?
Because structure is the exact same. Doesn't matter what time frame that you're on.
And one more thing, in 1 hour POIs, you still don't mind using a 3-minute break of structure and change of character, right?
No, it's pretty cool. Like I'll use sometimes 1 minute. I'll use sometimes 15 seconds. Sometimes I'll use 30 seconds off of 1 hour POI. Sometimes I use 5 minutes, but I'm not going to take a 15-minute trade off of 1 hour POI. They're too close. Like you got to be able to get a microscopic view of what's going on at that spot. And you just can't do that. So you can't do that if the time frames are too close. Like maybe the structure might align, but you're not really seeing what's going on at that spot, right? So we'll go back to your trade that you had for today, right?
Daily 1 hour.
I don't know why it's not doing what I want to do. Fine, I'm gonna do this then. All right, so taps into our daily POI. Where's my daily demand? And then you come over here on the 1 hour, you get a 1 hour demand zone tap right here. And then over here, we're gonna go to the 3-minute and just look at this. So help me. Okay, there we go. Oh, I need to pick my other watch list. All right. You get your tap in right here. It breaks structure right here. And then you decide to take a trade off of, we'll say off of whatever, right? Remember the question you asked me earlier? You get 3 consecutive bearish candles, and then you get this bullish candle, and then you get another consecutive bullish candle. What does that mean?
Yeah, momentum, V-shaped recovery.
And look at what happened.
Where are you taking a trade right there for real though? Right there? Is that exactly where you're taking a trade? Or lower? Like where's your equilibrium price and you'll be putting?
No, if I got in, I would have taken a trade from right here.
Right there.
Now, I want you to we're going to look at the same thing. Give me perfect. Now, I'm gonna put 5 minute here, 3 minute here. I'm gonna put 1 minute here, and I'm gonna put 30 seconds here. All right, so on 30 seconds, you get a chalk right here, and you get this entry.
Where is the chalk on 30 second? Lower low. Oh. No.
So it's hard to see. But you had this chalk right here. Now we're gonna use the exact same take profit, right?
Okay, I see.
What's the difference between your two trades?
Shit, 16R, 3R.
But it's the exact same setup. Now, I want you to think through this real quick with me. What did we do on the 3-minute time frame that was different than the 30 seconds?
30 seconds, 3 minutes. So right. I just chalked at a different place.
Nothing. We did nothing different. It's the exact same. That's why I say time frames are relevant. It's the same. It's the exact same concept over and over.
Yeah, just which one you want to get in earlier at.
You get in with the smaller time frame you go, the higher your stop loss, the more reward that you get out of the exact same move. But if you see you can't go too small and you can't be too high, right? Mm-hmm. Now on the 1 minute, you also had a same chalk, right? Mm-hmm. But you could have taken the same setup that you saw, because they chalked at the exact same place between the 1 minute and the 3 minute. Mm-hmm. And then now you have a trade that would have made you 5R.
Well, what's your stop loss on that 1 minute? My stop loss would have been, what's your real stop loss you would have got? You would have put on that 3 minute and 1 minute. Is that the stop loss you put 13 pips?
Same one on both.
That's not too much. That's not too far for you.
Nope. Because you got to know what time frame you're on. Wait, I don't even have 1 hour.
I was thinking like, cause as long as you put it under, you know, under all that stuff. So
no, see, that's the mistake I see people make. You can't your stop loss can't be determined by a predetermined number.
Exactly.
Because if I'm taking a 1 hour trade, I'm not going to have a 10 pip stop loss on a 1 hour trade. Mm-hmm. It's got to be relevant to your entry time frame. Mm-hmm. And the market's going to tell you what your stop loss needs to be. Mm-hmm. So here on the 30-second trade, my stop loss is 4 pips. Here on the M1 trade, my stop loss is 13 pips. Here on the M3 trade, my stop loss is 20 pips. So you can't just judge if somebody's going to blow an account by the size of their stop loss. I see people get attacked online on FTMO and all that kind of stuff for that. It's so stupid. But the size of a stop loss means nothing. Like it's relevant to what time frame are you entering on? That's the question.
What's your win rate?
Somewhere between 70-80%. Some weeks 85%.
Amazing. Okay.
So, yeah. That's pretty much it in a nutshell.
Appreciate it. Yeah, so exactly. Okay, yeah. So 1 hour POIs, you don't care. Yeah, time frame does not matter. Just structure matter. Did it change a character inside that POI? Okay.
We don't predict anything in the market. We react. Mm-hmm. So you get a touch in the area you're interested in, and then you just observe the reaction. Does it do something that gives you confidence that it's going to go the other direction?
Man, G, you be going, man. You need to go on that top of the year next year. Trade it with me.
You say what?
I said, G, you be going, man. You got to trade that top of the year with me next year, January 1st.
If their economy looks like it's going to recover, I'm going to trade GU. If not, I'm not going to be caught on the other side of a bank move like UJ. That was the only reason why I stopped trading GU. Well, because I don't trade no more than 2 correlations. So if I trade AU and EU, then I'm not going to trade GU. Like, I need to have variety so that when one thing stinks, I don't want everything to go take a shit.
And then obviously when you wake up in the morning ready to trade, you look at like all your pairs, right? From the top down analysis.
I only have to look at 2 time frames. I only look at daily, which is my higher time frame. And I look at my trading time frame, and then I wait.
You look at daily and then 1 hour.
Mm-hmm. Sometimes I look at M15, but that's because I'm paying attention to what is the M15 in relation to the 1 hour. Mm-hmm. So every time frame you go lower should be a microscopic view of something else. But if you get these 2 time frames that are too close together, you have to know. You see a trend on M15, see a trend on H1. The M15 should be some type of movement of H1, but you have to know what that is. Mm-hmm. Sometimes it's not. Sometimes it's a complete replica. Sometimes it means, oh, H1 shot up. H1 shot up is showing a bullish order flow. M15 is showing bearish order flow. But I remember now all of M15's order flow movement is just the top half of H1 pulling back. Now I know, okay, M15 is going to go until it stops at an H1 POI. But you have to spend more time just practicing multi-time frame market structure and just seeing, how it's showing you. All right. That's why I say it's best to probably keep it like where you have like your 3 charts side by side, because then you start to pay attention and say, oh, well, I hate when it puts my order like this. But you come here and basically can say, okay, so I'm looking at this candle right here, which is this movement right here, which on the 5-minute time frame is all of this. Like, you have to know how you're zooming in. The perfect way I think about it, right? Let's say you want to go to Bali. You're going to travel east. Well, for you, you're in LA, so you might travel west, right? Traveling west is your daily time frame, or whatever your higher time frame. Doesn't matter. It can be daily, it can be 4 hour. Just pick one. Then, if you're going to travel west, you're going to say, what countries am I going up to? Where I'm going from the United States to Indonesia. That is the trading time frame. If you're going to choose daily, make it 1 hour. If you're going to choose 4 hour, make it 15 minutes or make it M30. Your choice. Personal preference. Then you start asking yourself, all right, well, what airport am I flying into? The airport, that's your entry time frame. The airport is contained within the country, and the country is contained within what direction you're going. It's the same thing. Or we live in the United States, you live in California, but you specifically live in LA. Like, you're just zooming in to see more detail.
Yeah. Got it. Cool.
Does that make sense?
That makes perfect sense. That makes perfect sense.
All right, brother. Well,
so, yeah, so I'll see tomorrow. I'll look at it like this.
Yeah, take a look at it. Always share charts and stuff like that. Practice it, because the more you get it, you'll. That's how you get on the right side of the market. Like, it's not really much of a secret, honestly. You just got to be able to understand, like, what is each movement, what is each time frame telling you. Like, I can trade my entire system with only 2 time frames. Like, I could literally just say, you know what, scrap the 5 minutes, right? We're just going to use the 1 hour and the daily. And I would have come here, because I was considering doing this, but I decided I wasn't going to do it. I could come here and literally just take the exact same trade, take a trade from this 1 hour. Now, it greatly decreases my risk to reward, but I'd probably have a 95% hit rate.
Yeah, I was gonna do that on Nas. I seen something on Nas yesterday. I was gonna do that on Nas. Okay, so GU is obviously expectation of order flow. It's a higher high, higher low in the daily. So expectation of order flow, we should be looking for buys, right? Until further notice.
Yeah.
It should be buys tomorrow, right?
Hopefully it goes up. I mean, expectationally, you're kind of expecting for it to come. It made this move, so you're kind of expecting something like this, right? It looks like right now we're in which phase?
What phase is that? Oh, I skipped the name. Hold on.
Starts with an I.
Impulsive phase.
Yep. So we expect in the impulsive phase, we expect buyers to be here. So.
Yeah. See, I'm gonna start like leaving like a trade open just to like trade supply and demand on the daily. Just leave like something off my original buy. Like, I'm gonna start leaving stuff open maybe.
I mean, you literally could have taken this trade today on the 1 hour. Tap right into your demand and see, you get this. Look, this is why I say time frames are irrelevant. What do we see here?
V-shaped recovery.
Same thing. I showed it to you now on the daily, the 1 hour, and on the 3 minute. Like, it literally, any concept that you trade in trading should not be relegated to one time frame. It should work on every time frame.
It's really dope that daily and 1 hour when you broke it down. Like it's really dope. Daily 1 hour. It's really dope.
Yeah. So you don't really need more than two. You could trade all these systems and you could trade on a 2 hour time frame. If you want to maximize your R, you have to go look at this interaction, which means you have to go to a lower time frame so that you can have a stop loss like this.
Look for it.
But the direction has not changed just because you changed on a lower time frame. The direction is still this, right? So you take the same trade that you could have gotten. You take the same trade that could have gotten you 10R. You go to a lower time frame. Now that same trade gives you 30R. But you can't master this until you understand this on the higher time frame. Like you would just throw away your money. Oh man, I didn't do that. You would just be throwing away your money if you don't understand how the daily interacts to the 1 hour, because then it's going to be hard to understand how the hour reacts to a 5 minute, or how the hour reacts to a 3 hour, or how the hour relates to a 3 hour. I'm sorry. Relate is a better word to say.
Got it. All right. Appreciate you.
No problem. Good luck on your trading if you decide to trade. I am done for the year. Yeah, I am definitely not trading.
I'm gonna get my little practice in.
Yeah, back test.
I'm on demo. Yeah, I'm back testing. You know, I got these kids' birthday coming up, so I've been, I would have been finished that homework, but I got these 2 kids now, so I gotta take care of them too.
Nah, spend time with kids. That's where it's at. That's where it's at, brother. So, all right, brother. Give me a shout.
Yeah, appreciate it.
Once this video is up, I will holler at you.
All right, thanks.
No problem.